Have you ever wondered why you study so much about candlestick patterns, so much about indicators, so much about strategies, but when you step into the market, everything turns into an emotional chase? A long red candle appears, your heart starts beating faster, a strong green candle shoots up. You see an opportunity you cannot miss, and you enter a trade, not because of the plan, not because of the system, but because your emotion has just been triggered. That is when you forget a very basic truth. Trading, at its core, is a business of price movement. It is not an emotional game. It is not a reflex competition. It is not a race to see who enters faster. It is business. And what you are trading is not money, not indicators, not predictions, but price. When you open a store, you do not buy and sell based on emotions. You calculate costs. You wait for stable supply. You wait for the right customer segment. You wait for the right timing. But when trading, we behave like someone standing in a market, seeing someone shout a higher price and immediately rushing to buy, seeing someone panic sell and immediately selling in fear. We forget that. Whether price is at a high zone or a low zone, the market still operates normally. Price is never impatient. Only we are impatient. Price is never afraid. Only we are afraid. Price is never greedy. Only we are greedy. The nature of trading is doing business with something that forms over time. Price does not appear instantly. It is the combination of many candles, many transactions, many decisions from the crowd. One candle says nothing. Two candles still say nothing. But a structure, a consolidation zone, a resistance support area formed over time. That is the real product of a trader. Yet most of us do not wait for the product to be completed. We trade while it is still forming. Yes, imagine you are a real estate investor. You would not buy a piece of land just because you heard price is rising. You would look at location, infrastructure, planning, development timeline. Trading is the same. Price needs time to build structure. The larger the time frame, the longer the waiting time. But they all share one thing. You must wait. Wait for support to truly be confirmed. Wait for resistance to truly form. Wait for price to return to the zone your system has defined. Not waiting out of fear, not waiting out of lack of confidence, but waiting because that is the business condition. If you are a merchant, you only import goods when the price is good. If you are an investor, you only allocate capital when the risk-reward ratio is reasonable. So, why, when trading, do you enter just because of one long candle? That is not business. That is reaction. And the market does not reward emotional reactions. The market rewards systematic patience. That's when you understand that trading is the business of price movement, you begin to see everything differently. You are no longer pulled by every price tick. You no longer see every candle as an invitation. You start asking a different question. Has this price completed its structure yet? Has it reached my system zone? Is the risk-reward aligned with my plan? If not, no trade. It sounds simple, but it is extremely difficult because the nature of financial markets is not only price, it is greed. It is fear. It is the hope of the crowd. When price rises strongly, that is greed pushing it up. When price drops deeply, that is fear pulling it down. When price moves sideways for long, that is hesitation and waiting. You cannot control the crowd, but you can do business on their emotions. Trading price movement is trading emotional imbalance. When the crowd is too greedy, price is often in high zones. When the crowd is too fearful, price is often in low zones. But to recognize that, you must wait. Wait for structure to be confirmed. Wait for the zone to be tested. Wait for the setup to appear. Not guessing, not hoping, not praying, but waiting for the right business condition. Many traders fail not because they lack knowledge. They fail because they do not treat trading as a business. They open charts like opening a game. They want to act, want to have a trade, want the feeling of doing something. But in real business, not every day has a transaction. That is, there are days you only observe. There are weeks you only prepare. There are months you only hold cash. Cash is also a position. Not trading is also a decision. When you see trading as the business of price movement, you understand that. Capital is inventory. Risk is cost. Profit is the reward for timely patience. You cannot spend all capital just because an opportunity looks good. You must preserve capital to survive. Because if you run out of capital, you are no longer in business. You are out of the market. The irony is, most traders want to make money fast. But doing business with price requires time. Price needs time to form. Structure needs time to confirm. Psychology needs time to mature. You cannot force support to appear faster. You cannot force a trend to reverse according to your will. Just like a farmer cannot pull rice plants up to make them grow faster. Every time you FOMO over a candle shooting down or up, ask yourself, am I doing business or am I chasing emotions? If you enter because you fear missing out, you are not trading price. You are trading hope. If you enter because you fear losing more, you are not trading price. You are trading fear. Real business is always based on clear conditions. Price must be at the right zone, structure must be complete, the ratio must be reasonable, the system must confirm. Then, you no longer feel the need to enter. You simply execute a business decision. No excess emotion, no excitement. No fear, just a trade. And if it loses, that is cost. If it wins, that is profit. Both are natural parts of business operations. Trading is not about defeating the market. Trading is about managing yourself in the process of doing business with price. The market will always have waves, always have volatility, always have opportunities, but not every movement is your opportunity. You do not need every swing. You only need the one that fits your system. Yes, the essence of trading is doing business with price, and business always requires discipline. If you truly understand this deeply, you will trade less, but each trade will have higher quality. You will be less drawn to long candles, but more patient waiting for complete structure. You will no longer ask, will it go up more? But instead ask, have my business conditions appeared? When the answer is no, you wait. When the answer is yes, you act. No rushing, no hesitation, simply execution. And that is when you step out of the crowd, no longer someone led by emotion, but someone doing business on their emotions. When you truly accept that you are doing business with price, everything begins to change at the root. You no longer see each trade as a money-making opportunity. You see it as a deal with entry conditions, with cancellation conditions, with cost, with probability, and most importantly, with selectivity. A business cannot survive if it signs contracts randomly. But traders often enter randomly, just because the market is moving, just because of fear of missing out, just because they want to feel involved. The problem lies here. Most traders do not know what they are truly trading. They think they are trading the trend. They think they are trading the news. They think they are trading patterns. But all of those are just tools. The only thing you are trading is the movement of price from point A to point B. Nothing more, nothing less. It's if price does not move far enough, there is no profit. If price moves too far against you, cost increases. That is it. But because we attach emotion to every candle, we forget that simplicity. Try to see the market as a flow. Each time frame is a different breath. M5 breathes fast. H1 breathes slower. D1 breathes deep and long. But whether fast or slow, price always needs time to form structure. Without structure, there is no foundation for business. You cannot sell an unfinished product. So, why do you enter when structure is incomplete? Many people are obsessed with precision. They want to catch the exact bottom. They want to sell the perfect top. But business does not require perfection. Business requires edge. Edge comes from repetition of a probabilistic pattern. And that pattern only appears when price has moved enough to create clear support resistance zones. But this requires something most traders cannot tolerate: waiting in silence. When you wait, you feel like you are doing nothing. When you do nothing, you feel like you are falling behind. So you look for reasons to enter. That is not business. That is addiction to action. In the financial world, action addicts pay the price, because every action has a cost. Spread is cost, commission is cost, slippage is cost, and most importantly, loss of control is the biggest cost. When you see trading as the business of price movement, you begin to care more about cost than profit. You ask, do I truly need this trade? What is the cost of being wrong? Is the probability high enough to justify the cost? If the answer is unclear, you stay out. This is the separation point between 90% and 10%. 90% want certainty before entering. 10% accept uncertainty, but only when system conditions are met. 90% react to candles. 10% react to structure. 90% want emotion. 10% want edge. Let's talk about greed and fear. Financial markets exist because of these two emotions. When the crowd is greedy, price is pushed above fair value. When the crowd is fearful, price is sold below equilibrium value. Price is the chart of collective emotion, and you, a trader, cannot remove emotion from the market, but you can stand outside it. You can wait until collective emotion creates a clear opportunity. For example, when price rises continuously with many strong candles, the crowd begins to believe it will keep rising. That is when greed dominates. But if structure shows a strong resistance zone above, you do not need to chase. You wait for reaction. You wait for confirmation. You wait for setup. If it does not appear, you do not trade. Because you are not trading your greed, you are trading the crowd's reaction at key price levels. This requires a very different mindset, a business mindset. A business does not survive on one deal. It survives on the stable repetition of many small deals. Traders are the same. You do not need one legendary trade. You need 100 system-based trades. Each win small, each loss controlled. When you understand that, you no longer put too much pressure on each trade. You no longer see a losing trade as a personal failure. You see it as marketing cost. Some months advertising works well, some months it does not. But if the business model has edge, in the long run, it is profitable. Price is the same. No system wins 100%. But if you only trade when conditions are clear, you are doing business with edge. One of the biggest mistakes is thinking, the more I trade, the more I earn. No. The more you trade, the more you increase cost. And if there is no clear edge, cost will erode the account, like a store open 247 with no customers. Electricity cost rises, rent rises, labor rises. Eventually, bankruptcy. Traders are the same. Charts open all day, continuous entries, increasing size to recover losses. That is not business. That is burning capital. When you truly see capital as the blood of the business, you will protect it. You will not go all in because of emotion. You will not increase volume because of anger. You will not DCA just because of hope. Hope is not a strategy. Hope is a sign you have left the system. Doing business with price means you only act when price enters the zone you prepared in advance. If not, you let the market pass. The market will always have opportunities, but your account is not unlimited. The winner is not the one who catches every move, but the one who survives long enough for the right moves to appear. And survival is the first goal of every business. If tomorrow you still have capital, you still have opportunity. If you blow your account today, all analysis becomes meaningless. The essence of trading is doing business with price. And business requires three things: discipline, patience, risk management. Without these three, all technical knowledge becomes useless. To build a personal business model in trading, you must start with a very honest question. Where exactly am I making money from? Not making money because of the market, not making money because of luck, but making money from what specific aspect of price movement? If you cannot answer that clearly, you do not have a business model. Yes, you are just participating in the market. A trading business model needs 5 core components. First, product. Your product is not buy or sell orders. Your product is a specific setup. For example, breakout pullback continuation, reaction at strong resistance, accumulation pattern after trend. You do not trade everything. You trade one type of product. The more specific, the better. The clearer, the easier to repeat. If you do not clearly define your product, you will see opportunities everywhere. And when opportunities are everywhere, discipline disappears. Second, entry conditions. A business does not import goods if conditions are not good enough. A trader is the same. Price must reach the right zone. Structure must be complete. Risk-reward must meet standards. If one factor is missing, no trade, no exceptions. The biggest problem of traders is not lack of knowledge. It is being too flexible with their own rules. Today widen stop a little. Tomorrow increase volume a little. Next week add one more trade just in case. Gradually, the business model turns into a chain of emotional reactions. Third, risk management. Every business has a risk budget. So do you. How many percent per trade? How many percent per day? How many percent for a losing streak? If you do not have clear limits, each losing trade will drag you into a spiral. And when emotion enters, you are no longer trading price. You are trading to recover. Recovery is not a strategy. Recovery is a sign you have left the business mindset. Fourth, measurement system. A business does not operate by feelings. It operates by data. Traders are the same. You need statistics. Win rate, maximum drawdown, which setup performs best, which time works best. If you do not record, you will rely on memory, and memory is always biased. You will remember big winning trades and forget small but consistent losing streaks. Fifth, operating psychology. This is the most important part. You may have a good system, but if you are not patient enough to wait, you will destroy it. You may know to risk 1%, but when losing consecutively, do you increase to 3%? Do you skip conditions just because it feels good? Doing business with price is not only understanding market structure, it is managing your own psychological structure. There is a truth few accept. The market does not create pressure. Your expectations create pressure. When you want to make money fast, every candle becomes a promise. When you urgently need money, every opportunity becomes salvation. And when you trade under pressure, you are no longer a business operator. You are a beggar. The market does not reward begging. It only reflects supply and demand. Crowd emotion creates movement. Price structure creates opportunity. But only the calm can see it. Let's talk about time. Price needs time to form, but traders do not want to wait. We live in an age of speed, fast news, fast feedback. Yes, fast profit desired. But market structure does not obey your impatience. A strong support zone may take many days to accumulate. A major trend may take many weeks to complete. If you jump in the middle of that process, you are trading noise. And noise always creates loss. When you truly understand trading as the business of price, you change your view of profit. Profit is no longer the daily goal. It is the result of executing the process correctly. You cannot control the outcome of one trade. Yeah, but you can control adherence to your system. And in the long run, a good process creates profit. A successful business is not one where every deal wins, but one with overall edge. Traders are the same. You do not need to win today. You need to be right across the next 100 trades. You do not need to catch tops and bottoms. You need to preserve capital and wait for clear structure. When you shift from looking for opportunities to waiting for conditions, you have entered another level. You are no longer dragged by every small fluctuation. You start seeing the market as a map. Each price zone is a business area. Some zones are high risk. Some zones have clear edge. And you only operate in edge zones, like a store opening only where customer flow matches. Not the busiest place, but the right segment. Finally, remember something very important. Doing business with price is not fighting the market. It is cooperating with its structure. You do not force price to follow your will. You wait for it to enter your zone. If it does not come, you do not chase, because opportunity will always return. But once discipline is lost, it is very hard to regain. When you truly absorb this, you will trade less. But each trade will carry more decisiveness, less emotion, less FOMO, less hope. And you begin to see trading for what it truly is, a business activity, based on price structure, based on crowd emotion, and based on your own discipline. Most traders, have actually heard these things before. They know they must wait, know they must manage risk, know they should not FOMO. Know trading is probability, but they still fail, not because they do not understand, but because they do not live according to what they understand. There is a huge gap between knowing and doing. Knowing you must wait for structure to complete, but when price runs strong, you still enter. knowing you should risk only 1%, but when the previous trade loses, you increase to 3%. Knowing you must not trade outside the system, but when the market looks good, you break the rule. The problem is not knowledge. The problem is ego. Ego wants to be right, wants to be fast, wants to be special. But doing business with price does not care who you are. It does not reward the most confident, not the most experienced, not the best speaker. It rewards the most consistent. Consistent in waiting, consistent in entering, consistent in cutting losses, consistent in stopping. And consistency sounds simple, but in reality, it is the hardest thing, because consistency requires accepting boredom. Waiting is boring, not trading is boring. Keeping the same volume for months is boring. But that boredom creates profit. The unsuccessful seek stimulation. The successful seek repetition. When you truly see trading as a long-term business, you are no longer obsessed with each day. You look by quarter, by year, by cycle. You ask, in the past 6 months, did I follow my system? In the last 100 trades, did I maintain structure? Is my drawdown within plan? If the answer is yes, you are on the right path. Even if this month you lose, a good business may have a losing quarter, but if the model has edge, it recovers. Traders are the same, but most traders cannot tolerate drawdown. They see drawdown as proof they are wrong, when in fact, drawdown is operating cost. If you run a coffee shop, there will be days with few customers. You do not smash tables because of one rainy day. So why break your system because of one losing week? Because you still do not truly see yourself as a business operator. You are still seeking the feeling of winning. When you want to win, every losing trade becomes an attack on your ego. When you want to operate a business, every losing trade is just data. That is the difference. A mature trader does not ask, am I right or wrong? They ask, was my process executed correctly? If yes, the result is only a matter of time. If no, adjust the process, not the emotion. There is another reason many fail. They do not separate their account from life. They trade with money needed for living. They put financial pressure on every trade. And when you trade under pressure, you are no longer doing business with price. You are trying to survive. Doing business with price requires calmness. Calmness only exists when you are not cornered. That is why capital management is not just percent risk. It is also whether you trade with extra money or needed money. If you need that money to live, every candle becomes a threat. And when the market becomes a threat, you react instead of wait. Finally, to truly live with the long-term model of doing business with price, you must change 3 layers of thinking. First layer, from seeking profit to protecting capital. If you survive long enough, profit will come. But if you seek profit before learning to survive, you will exit the game very quickly. Second layer, from reaction to preparation. Instead of opening charts and waiting for opportunity, define zones first. If price reaches, you act. If not, you leave the screen. No prepared zone, no trade. Third layer, from emotion to system. You do not trust feelings. You trust conditions. You do not trust it seems like. You trust it is sufficient. When conditions are sufficient, you enter. When not sufficient, you stay out. No arguing with the market. No trying to prove you are right. Just execution. And then one day, you will realize you are no longer nervous when entering. No longer shaking when price moves a few pips against you. No longer excited when profit is large. You simply see it as numbers, a data line, a deal. And that is when you truly step into the state of a price business operator, no longer someone chasing candles, no longer someone controlled by emotion, but someone who understands. The market exists because of the greed, fear, and hope of the crowd. Price is only the record of those emotions, and you are no longer part of those emotions. You stand outside, observe, wait, execute, repeat. That is the true nature of trading. Not glamorous, not dramatic, but sustainable. And if you are patient enough to walk this path, trading will no longer be a battle. It becomes a profession, a business, a system operating based on price structure and your own discipline.